Hey guys, it is Julie here with TipRanks. Today we're taking a look at two dividend stocks that have yields over 10%. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are talking dividend stocks, which I know a lot of you love, and specifically many of you are always looking for those high dividend yields. So that is what we're focused on today. Two stocks that both have dividend yields of over 10%. So we'll take a look at these companies, what it is that they do, those dividend details, and of course how Wall Street analysts are weighing in on the stock's future. Make sure you've downloaded the TipRanks mobile app so you can stay up to date with all the latest news on the go and access your favorite research tools. Links will be in the description down below. Now let's jump right into these dividend stocks. We'll be starting off with a company called Sixth Street Specialty Lending. Trading under the ticker TSLX, their stock is priced at $18.69 per share. Over the past year, they've seen growth of 11.7%. As the name may suggest, they are a specialty finance company. They act in the middle market sector, providing credit and financing to small and mid-sized enterprises that don't always have access to the traditional banking sector. Sixth Street's role in the credit system helps support the smaller businesses that have been long drivers of the U.S. economic activity. From the company's start back in 2011 through the first quarter of this year, Sixth Street has originated approximately $26 billion in total loans. Their portfolio is diversified and aims for low volatility. Sixth Street does pay a quarterly dividend and declared 46 cents for the last quarter, but they also declared a supplemental dividend of 4 cents per share. This is the second declaration in a row that the company has included a supplemental dividend payment. The base dividend alone comes in at 9.3%, but that supplemental dividend boosts the yield to over 10%. Sixth Street did report their last quarterly earnings report back on May 8th, where they did come out with an earnings beat. The next report is due on August 2nd. They reported total investment income of $96.5 million in their Q1, which grew 43% year over year and came in ahead of analyst expectations. Their Q1 earnings per share of 55 cents came in ahead of estimates by 1 cent per share. Following that Q1 earnings report, we had 8 analysts reiterate their price targets, and they all come in with unanimous buys. The most recent came from B. Riley Financial's Bryce Rowe. He said that Sixth Street has consistently delivered industry-leading profitability with its 10, 5, and 3-year returns on equity ranking in the top 5 of BDCs that we track. We believe its fundamental performance is particularly impressive, considering that its investment portfolio is largely comprised of debt investments. His price target of $21 comes in right around the average for the Sixth Street stock. Those 8 analyst ratings average out to a price target of $20.41, which would be an upside of over 9%. We see Bryce's rating here on the stock around a 13% upside, and there's several others that are right around that as well. And our second high-yield dividend stock is ARCC. Their stock trades under the ticker ARCC, currently priced at $18.62 per share. They've seen growth of 17% in this past year and over 9% in the last few months. ARCC is a management investment company. They are a business development company, or BDC. They are a credit and financing firm that makes capital resources available to small and mid-market businesses. In all, ARCC provides a combination of funding, credit, and other financial instruments for its target client base. They have a somewhat diversified loan mix as well as diversified sectors. 21% are in the software industry, 11% in healthcare, and 9.8% in commercial and professional services. In all, they have $21.1 billion in total investments in 466 different companies. They most recently declared a quarterly dividend of 48 cents per share, giving them a current dividend yield of 10.17%, which is well above the sector average of 2.1%. And with a couple changes along the way, they do have a fairly solid track record of paying out a quite generous dividend. Their latest earnings report was released near the end of April, where the company did have a miss. They fell just 2 cents short of analyst estimates on earnings. For their Q1, they've reported earnings per share of 57 cents, which came in just 2 cents shy of analyst estimates. The next quarter, coming up on July 26th, they're anticipating about the same. They did report $618 million in total net investment income, and that was up 40% year over year, but did miss the forecast by about $15 million. Once again, we have B. Riley's Bryce Rowe weighing in on the stock. He said following an earnings miss, but paying a high dividend gives the stock an interesting risk versus reward. He said that we see the risk-reward profile as favoring reward, given the supportive earnings environment, ARC's strong track record of underwriting versus NAV growth, and its leadership position among direct lenders. ARC has, in our opinion, thoughtfully managed its capital structure by extending maturities early, maintaining a reasonable balance between fixed and floating rate debt, and raising equity accretively via the at-the-market and public offerings. He gives the stock a price target of $20.50, which once again is fairly close to the average. Overall, the stock has 8 current analyst ratings, and that is based on 7 buy ratings and 1 hold. The average price target is just shy of $20 per share, which would be an upside of 7% from current prices. Here we can see prices with the most recent rating, and others coming in ranging from that downside of 3% to upsides of about 13%. So there we have 2 high-yield dividend stocks, both with yields over 10% and coming in with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these 2 companies in the comments down below and some of your other favorite high dividend yield stocks. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what Wall Street analysts are looking at and providing some information and entertainment. Make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end, don't forget to hit that thumbs up button and that you're subscribed to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.